Hey, what's going on, guys? Welcome back to Modern Options. Today I want to go over my trading setup that I use, and then also the entry criteria and just the steps I take before I make trades every day. So first, for my trading setup, it's not what you may think. I don't have 3 different monitors watching a plethora of different stocks. I don't have an RGB keyboard, and I don't have a super fast processor. I literally use a phone. And you can too. Not everyone needs to have this just crazy setup on their desktop so where they're sitting down and they can see things. To me, that just gives me analysis paralysis where there's just too many different indicators that I'm trying to look at, too many different stock charts to look at, and I don't find it useful, at least for my trading setup. But everyone's different. I do it this way because I still work a 9-to-5 job and I'm not able to sit at my desk at home and actually trade. I was actually forced into this way of trading, but it can be done and you don't need these crazy setups that all these YouTubers have. So I'm just gonna go ahead and open up Thinkorswim here and show what I would do on any given day when I'm checking the market. So first I might go in and actually check /ES or /ES, and that's the S&P 500 futures. So you can look at that before the day actually starts and kind of get a sense of what the market is trending based on any news or events that was released over the weekend or just midweek. And you can see where the general direction is trending. Once I've checked that, then I'll actually go towards the SPX and then click on the news banner that's in the middle here. And this is just going to give me a general overall what has been going on within the last day or this morning or yesterday. So looking at this gives me a good sense of what's happening or what major news has been released before the market opens. And then once the market opens, I'm able to see how far the morning gap was or if it remained relatively flat based on what percentage the S&P is up or down right now. And the chart I generally look at first is the 1 minute, just to see for 1 day, 1 minute, and see where the market is generally going just from that opening candle based on where it was and it closed yesterday. After I've observed that, I'll go over and I'll look up $ADD, which is the advanced decline. And that shows the amount of stocks that are advancing versus the amount of stocks that are declining within the market. So generally, if it's a positive number, it's in a trending bull market. And if it's a negative number, it's in a trending bear market. However, these numbers can be misleading where that's not to say if it's straight up negative, then it's going to be bear market. And if it's positive, it's going to be a bull market. You have to see how close it is to that 0. So if it's 0, that's kind of more of a neutral day. So my rule of thumb is if it's kind of floating anywhere between 5 or 800, -5 or 800, that's still kind of a neutral zone. And this volatile market's throwing everything out the window. So this is in generally calmer markets, but it still helps in this crazy market we have going on. So if you're in something extreme like 1500 or -1500, it's pretty safe to say that the market is trending that direction unless there's a huge reversal that happens. So that'll help me determine if I want to go on a call side or if I want to go on a put side. And as well as I'll also check the VIX and see where it's trending at right now. So we've been floating above the 20s this past week, coming up from highs of 26. So it's still relatively volatile right now with all of these inflation fears that are out there. So after that's happened, then I'll go back to SPX, and I'm still waiting around 30, 60, 90 minutes before I enter my trade, depending on what's going on in work that day, and I'm able to step out and place this trade. So when I go over to my options chain, I usually like to keep my strikes at 50 so I can see a wide variety, and my spread as custom. That way I can choose my long and short strikes as I want to. So I'll first go down and see where that dotted line is that shows where the S&P is currently trading. And then from there, a lot of people go towards the delta and then see if I want to get a 10 delta trade, but for me that doesn't really work. And that can change at an instant. So I usually will just look at main support and resistance lines and check that ADD indicator and see what's going on. So I'll go back maybe about the 5-day or the 10-day and see where the market has generally been trending. So there's a little support line there right at about 4450, as well as the previous support line was at 4300 until it trended all the way up and hit that resistance line close to 4600. So using those, kind of keeping those in the back of my head, I still like to go at the 1 day, 1 minute for that current day that it's trading. And then I'll just start to go down the line. If I want to do a call spread, I'll start going up until I can generally get about 10% or less of what my width of my spread is. So let's just say you're doing a 5-wide spread. That was 80. I'm going to keep going down. And remember, since I'm doing custom, I pick all my legs. So in order to sell, you need to hit on the bid side. In order to buy, you need to hit on the ask side, and that forms your call credit spread right there. Click next, and that brings you to your order. 70, so that's still a decent bit. And sometimes I like to factor in my commissions fees too into this. But that 50, that might be a good one to have as well. But that's 50, even though it won't cover my cost of commission, it's still 10% or less, and that might be a trade that I would enter. Very simple, guys, nothing crazy going on here. And then I'll look, once I've reached that number, I'll see, okay, that was at 45.60 and 45.65. Let me scroll back up and go to the chart. So in the last 5 days, we almost got up to 4,600. But when was the last time I was up to 45.60? After that gap down, it looks like just above 45.40, still trending down and now trending back up, hit another 45.40 again. So that resistance line was pretty good. So 45.60, I might feel comfortable taking that if that was a trade that I was going to put on. Of course, this is a Sunday, so you're not going to be able to see what the actual premium would be. It's going to be less when the market opens tomorrow. But that's how I'll generally look at the criteria, and then if it's the opposite, I'll do it on the put side. So once I have done that, I always do a limit order, put it at the premium that I want to receive. Once you review it, you make sure that it's you're selling to open, not buying to open, and then you go ahead and send that order. Now, if I'm doing the opposite, and as soon as I place that order, let's say I did get filled for this at 50 cents for $50, I would then just go ahead and immediately put in a stop limit order, change it to +1 because I'm buying to close it. And as of right now, I'm still doing a 2x premium received. But for this stop limit order, I'm gonna make my stop be at, I'll either do 95 cents or at $1. So I'll just go ahead and do $1 today. $1 for the stop, and then 105 for the limit order. So what this means is that if the price of this spread reaches $1, it will place a limit order at 105 and stop me out at a price of no more than $1.05 or 105 bucks. I do that 5-cent increment so that way there's no slippage. Like if the market's moving really fast and it doesn't just blow past my stop and I'm not actually filled, I don't want that to happen. I should maybe do it more than 5 cents. Maybe I should do it up to like maybe 10 cents, but for now, the 5 cents has been working for me if you're doing like a 5-wide spread. And then I'll place it right there. I'll go ahead and review that, make sure everything's good, and send it. The other thing that I've done sometimes is I'll do a stop limit order. And another thing I'll do is I'll scroll down to here and click create advanced order, and that's called a OCO. And once you click add order, you're basically able to set up a take profit order. So that way you can buy it for 10 cents if you want to, but also still have that stop in. So you can have both sides covered. You can go back to work and you don't have to worry about it. So all this generally takes me, once the market is open, anywhere between 5 to 10 minutes, usually no more than 5. I like to keep it simple because I have to get back to work. So some updates to my rules on how I actually enter these trades. So particularly for small accounts, it's kind of hard to do this 1 to 2% risk at max for your whole portfolio like you can do with larger portfolios. For smaller accounts, it might be better to do like 5% risk of your portfolio at any given time, so that way you don't just get blown out of the water. It's been very volatile lately and the market's kind of kicked my butt around, but I've remained afloat and I'm still able to trade in these markets even though the market has trended down. I've remained neutral in this type of market. For the size of your portfolio, let's say it's a $2,000 portfolio, I don't want to take on any spread that is more than half of that. So if it's a $2,000 portfolio, I'm only taking a 2 5-wides or 1 10-wide spread, so total collateral value of $1,000. And then from there, I'm only taking 10% of that width. So if it's $1,000 that I'm putting up at risk, then I want to get a premium of about $100. And I don't want to risk more than that, so that way I won't lose more than 5% of my portfolio at any given time. It seems to be working for me so far. I will probably start to scale that down as my portfolio grows and maybe get closer to that 2% rule, so one bad trade doesn't wipe out 5%, only wipes out 2%. So let me know down below, guys, if any of you guys are also mobile traders and don't have a sick desktop setup at home. If you like this simple way of trading, go ahead and leave a like on the video, and I'll catch you guys in the next one.